Welcome, everyone. We're so excited. We have an amazing panel with some real heavyweights in the ed tech and workforce investing space. I don't think there's a better panel that I've seen in a long time than these four individuals. Really excited to be here, and thank you all for joining. Just to set the framework, ever since the pandemic, there's been a precipitous drop in funding for education technology companies. Across all sectors, there's been a 35% drop in funding. In education technology companies, there's been a 50% drop. Early stage companies with $2 million in revenue and less have had the hardest difficulty in raising capital. But in choppy economic times, there's a great opportunity to spawn innovation. Talent leaves corporations, they start new startups, and we're fortunate that all of these four individuals have a lot of dry powder and they're actively investing, just as ASA is investing. Lastly, ASA started a new $25 million pool of funding to support diverse managers, minority entrepreneurs, and early stage companies. We launched that new pool in November of last year. That's on top of the $125 million we started 2.5 years ago. In total, out of the 150, we've invested $69.5 million across 11 funds and 9 direct companies. And out of the direct companies, we've led or been the sole investor of half of them. And we continue to take a lead or sole position in all of our direct investments as we shift from funding funds and going more to a direct strategy. That's quick about ASA. We're going to dive right in. I'm going to start with Mark. Mark, I'd love to hear from you the opportunities and challenges of investing in career-focused education early-stage companies, as well as what are you seeing in the K-12 higher education and employer-driven markets that are funding and focused on career-focused education?
Sure, thank you. Thanks for having us, and welcome everybody. First time at SOCAP, and it's a very, very good vibe. So our lens for those three sectors has to do with some of the challenges and the numbers that are both existing and what we might aspire to. So in the K-12 space, let's say, about 85% of people graduate high school, and then about 56% of people who start high school enroll in college. So there's 44% there that I think are deserving of opportunities and solutions that are not maybe appropriate for the college going. But I think most of the curriculum and the experience is focused on those folks that are headed to higher ed. So there's things like, besides third grade literacy and sixth grade math, I think the core, which gets most of the budget, is mostly a college-focused initiative. And so things like vocational education, career and technical, social emotional learning, 21st century skills, entrepreneurship, a lot of those are periphery courses in K-12, and it's hard for us to invest in things that aren't core because in a budget challenge environment, there's not a lot of non-core activities. So I guess that's a policy statement, but increasingly through initiatives like ASAs and others, we have more CTE focus across some of the K-12 initiatives. So I think just recognizing that 44% and having maybe 44% of the courses focused on that population. So then by the 56% that enroll in college, about 30 of those folks graduate. So we've done a lot of investing in, along with Matt, in things that create retention in higher ed, and so holding on a lot of data-driven technologies have been pretty interesting. Enrollment's way down in higher ed, so that's a big challenge, but the more, they're defined as non-traditional students, but they're the majority. The working, the adults, the part-time students, getting more career education, more online, blended learning that gives them the flexibility if they have kids and jobs. Those are the programs that are growing. So they use technology and more work-based learning approaches and things that are pretty interesting. And then from the employer side, You know, there's a World Bank study that showed that if you're trying to do job training and the employer's not involved, it doesn't work. But most of the people are looking for job training, either in an educational or an alternative pathway. And so getting the employer involved has been a real challenge for us. And there's been a lot of innovative companies that try and do apprenticeships or internships, and they've had difficulty scaling. 10 years ago or 15 years ago, there were 400 corporate universities, and now there's 2,000. But I don't know of a single corporate university that's giving any education to somebody that's not a current W-2. So breaking out of that and getting employers involved in some of this educational process. And when I was at University of Maryland, I had a role to try and get employers involved in credentialing pathways. You get stuck in exec ed, right, and sort of these career programs that are for alumni, instead of really addressing, now we're at like 70% of the population that hasn't been served by higher ed. And these non-traditional students, they need these alternative pathways as well.
Mark, I forgot to say that I'd like everyone to briefly introduce yourselves before you start. But since I forgot Mark, he's the founder of New Market Venture Partners, one of the top growth capital funds in our country today. Moving along, Allison, you're a partner at Semper Virens. Semper Virens has the unique position of having a direct contact with 150 CHROs in the United States, 8 of the top 10 employers that in turn have oversight on 2.5 million employees. We'd love to hear what you're seeing in the market on the career-focused side, future of work, workforce development side at Semper Virens.
Great to be here. Thanks, everyone. As Rilwan mentioned, I'm a partner at Semper Virens. We're an early-stage venture fund focused on B2B healthcare, workforce, and financial technologies. Our differentiator is this platform of end customers for our portfolio companies. So we have a community of 150 senior HR leaders, all at publicly traded companies, so looking at enterprise scale. Employers like UPS, Amazon, Visa, Electronic Arts, Albertsons companies. So kind of run the gamut in terms of population of their employee base. But that's really what informs our view of workforce development technology for the employee. We have about $300 million under management, and we invest anywhere from seed to Series B. I actually come to this type of investing at Semper Virens. I've been there for 5 years. Our firm was started in 2018, but my journey with career education started as an operator. I was one of the first employees at a company called General Assembly, which pioneered the boot camp models for technology skills. So developed those programs, and then through that as an operator saw how the employer had to be at the table, or else our value proposition was definitely nullified if our customers couldn't get jobs. And then I started a seed fund about 10 years ago, so called Fresco Capital. So I've been investing in this space for a really long time, and really ended up with the conclusion that that direct line to the employer is really critical. So we've been spending a lot of time with our CHROs, understanding how they're investing in their workforce. I hate to be the first person here to mention AI today, but that's been really top of mind on what that does to the workforce and how those decisions get made. Historically, the CHRO has been the one making a lot of the decisions about how we invest in workforce readiness, how we invest in talent solutions, how we think about apprenticeships. And a lot of that is getting circumvented now by the CTO or the CFO or even the CEO of a company kind of automatically moving forward with any kind of AI implementation, which then will trickle through into who gets hired and when. So a big part of that infrastructure is really related to skills and helping CHROs and CEOs or COOs and CTOs, whoever's involved in reimagining what the workforce looks like, really drill down into what can our employees do and how do we maintain that on a real-time basis, which is a precursor for figuring out how to reorganize the workforce, train them, retain them, create pathways for them. So we've been focused a lot on what is the infrastructure that needs to exist, We're investors in a company called TechWolf, which is an API-first solution for real-time skills intelligence. And that has been a big part of the conversation lately. And then the other thing that we're very focused on right now is actually looking at the intersection of healthcare and the workforce. Healthcare workers are a big part of the hourly workforce. They tend to be female and of kind of underrepresented minorities, and so they are impacted very heavily by big employment decisions. So we've been making investments in the healthcare workforce, companies like Stepful, which is an AI native training solution for entry-level healthcare workers, starting with medical assisting and then creating pathways into higher earning healthcare roles. So that's just a little bit of a flavor of what we've been focused on.
Thank you, Allison. And she recently published a book on how to get into venture capital. So if you're trying to get into venture, buy her book. That's a great segue into our next question. I think a month or a week doesn't go by where employers are constantly saying to the public that they want to hire based on skills versus academia, right? And Matt, we'd love to hear from you what you're seeing at Rethink Education in terms of companies that are helping bridge real-world skills with academic curriculum to provide the students and new employees for the future of work.
Yeah. So far, AI does not seem to have destroyed all that many jobs, but it does change jobs. And so as we prepare people for work, we are aiming at, to some extent, a moving target. If you look at the statistics on how much is spent on education globally every year, you see figures like $6 to $8 trillion, of which a third is in the US, so 2 trillion or so. And the number that most people assign to corporate learning is shockingly small. It's 200, 220 billion or so. I remember the first time I looked at that number and I thought, that's odd. I really thought that corporations spent more on this. And it turns out that that is basically just a number for more or less traditionally defined corporate learning and development, with which there is, wide dissatisfaction. It is often not how people actually learn to do their jobs, which happens in a more informal way. So my firm backed some years ago a company called Greed, which Maya, who is sitting in the audience and who's on my panel tomorrow, helped make a pivot from a consumer model to a B2B model, helping to record the informal learning that people do throughout their day. So I went looking for estimates of this informal corporate learning, and I finally found one in a paper published by Anthony Carnevale of Georgetown. And this was a paper published back in 2015, so it's a bit out of date. The numbers are small. He thought that informal corporate learning in the US was something like $413 billion a year. A curiously precise number based on imprecise methods, but more than twice the figure attributed to learning and development. And I think also based on a still relatively narrow definition of learning and informal training. So for example, what we are doing here together probably wouldn't be counted in Carnevale's estimates, but it certainly is learning. And there's a lot we don't know about the effect that AI is going to have in 2 years or 5 years or 10 years, other than suck a lot of money away from other budget initiatives. But we do know that the things that can be handled in a routine and predictable way are going to be automated one way or another. So I think it's possible to imagine a world, and I think this future is already here for many of the people in this room, where you will spend 80% of your time on the job learning. and 20% applying, because that's the only kind of work that will allow humans to add value on an ongoing basis. So our education system needs to be changed. The theme of this conference is one that I am obsessed with: systems change, catalyzing systems change. And there are a lot of obstacles to doing that, more in K-12 than anywhere else. You know, state curricular requirements, teachers' unions, and their agreements with districts, expectations of parents, the desire to get into college, et cetera. There's kind of a death march through a set of largely irrelevant topics in mathematics and elsewhere, and people aren't getting what they need. And I'm going to try not to be excessively verbose, but I just want to paint a picture for you of what education for the future should look like. So there's a robotics course at High Tech High. On the first day, the students get divided into groups of 4, and it doesn't have to be robotics. It could be almost anything. But on the first day, they dream up a cool robot. Like, I want to build a helicopter robot that rescues a plastic mountaineer figure that has been stranded on a mountaintop. I want to build a swimming robot that ingests glowing food pellets. I want to build a robot tank that can crawl up a mountain. And then, gradually, sneakily, they get introduced to the question of scoping the work and figuring out what it would actually take to build that robot. And they have to modify their designs to bring them into line with reality. But along the way, they learn how to program an Arduino controller in C. They learn how to weld, or solder at least, and they learn how to use a jigsaw to cut plexiglass, and they learn how to debug things, and they learn all of the skills that employers actually want people to have in the workplace in this one class, this one semester, and yet people keep graduating from high school without anything like this level of skill. I mean, it was so moving. These kids are not particularly affluent and not particularly STEM inclined, but you can see that they're never going to approach any hard problem the same way again in their lives after this class. Instead of asking, do I know how to solve it? Can I Google the answer? No? Oh well. Or can I OpenAI it? Instead, they will be asking, how could I build the skills to solve this? Is the problem scoped correctly? That's what employers are looking for. And unfortunately, there are very few educational programs that deliver that kind of skill.
Thank you, Matt. You forgot to give yourself a quick bio, but Matt Greenfield is the founder of Rethink Education. Caroline, Sonin Capital has a Latin America-focused fund that invests in funds and does direct investments. But more importantly, a majority of the business is to provide advisory services for large foundations and family offices. We'd love to hear what are you seeing in the space and what kind of advice are you giving some of your clients?
Yeah, absolutely. So, hi everyone, Caroline Azzolino, Managing Director and Head of Research at Sonin Capital. And what we do is partner with foundations, family offices, endowments to be able to invest their portfolio across asset classes. And what we do is we take an outcomes-based approach in what we do and in partnering with our clients. And that gets me very excited because we've been able to invest in education, career readiness, workforce development for over a decade. And we get to take a real holistic approach and think about different ways that we can partner with clients on getting more money into this space. What I've found over the years is that there tend to be, various trends in impact investing themes. One year something's hot, the next year another thing's hot. Education is the root cause, or lack of education, inequality in education. It's the root cause of so many of the problems and the need for systemic change. And so the need to put more money into this impact theme, if you want to think in a silo, is so incredibly important. But what I get excited about is if I have a client who wants to do climate, education's a component in that. And how can we integrate that into what we're doing? Because it's incredibly important to consistently put capital to work, to consistently invest in these early stage ideas so that they can grow, and we're able to put that capital across the capital stack, right? So let's do from seed stage all the way into the public markets. That's what we get excited about, and that's what we can do and partner with our clients.
Thank you, Caroline. Mark, intentional post-secondary pathways and micro-credentialing. How can these aspects help students and professionals better prepare for the evolving workforce today?
Good question. The first thing that comes to mind is a set of data that shows that if you graduate with a BA, you're about 25% likely to have a job that requires a BA that you like, that provides a quality standard of living. You go up to a 75th percentile if you get a BA and an extra credential. And when I say that to people, people often ask me, well, what is an extra credential, right? So you can think of CPA or PMA or those sorts of things. But we've seen in our sector this credentialing regime explode in the last kind of 10 years. And some of them are high quality and some of them aren't. Matt mentioned Tony Carnevale. He's done some good research on ROIs on some of these credentials. And so thinking about, and we've heard for years about stackability inside of higher ed, where you can get a skill taught and assessed and maybe credentialed as a way to a BA, and certain professions do a really nice job aligning promotions and different sorts of levels, like healthcare, inside of an AA and a BA, and in other professions not so much so. And so there's been some mention of skills-based hiring, which would be based on recognition of skills versus just the paper that your BA is, the quality of the institution that you went to. I think we're all seeing deal flow. Our most recent investment was in a company called Sensia, which has over 1 trillion data points on employees, and then they use AI to match patterns that have been successful professionals with the internal workforces and integrate inside of your Workday profile to see if you have a pathway that resembles somebody else that's been successful and how they can fill in the gaps and those sorts of things. So that promise has been there for a while. There's that expression, right? You always overestimate what's going to happen in 5 years and underestimate what's going to happen in 20. And so I think we're kind of past the 5 years of this skills-based hiring and the credentialing around different individual skills, but employers haven't aligned on what those definitions are. So there's a lot of opportunity for entrepreneurs, I think. MC Burning Glass could have gone after that. I don't know why they didn't inside the corporation as well, and the ONET folks. And so different people have tried to create these credentialing regimes. Ultimately, you need a set of employers to recognize their value. And it also begs an assessment regime question, right? So there's a lot of interesting assessment companies that exist or could exist around this. And then there's training on specific skills. We're looking at a EV skills training, right? So you get the climate overlapping with the education. There's a lot of good stuff in this space. And I think universities are starting to open up. You know, again, you get stuck in exec ed a lot with these, so our entrepreneurs aren't able to sell into like core instruction. But you would think if there's this BA plus a degree improves outcomes so much, I mean the BA plus a credential, that the universities would start bringing in these. And the other thing I like about what Matt's story is these credentials often lend themselves to authentic, project-based, student-led, real-world experiences that the employers care about. And we mentioned these employer universities. Like as soon as the employer starts saying, here are some robotic types of experience. I'll give one complaint, but it shows the opportunity. So when I was at University of Maryland, Deloitte was a big recruiter, and they used to come and take all my best entrepreneurial students. And I would say, why are you going to Deloitte? You should go be entrepreneurs like the folks in this crowd. But We also taught a consulting class where we used an old stale Deloitte case. So as a professor teaching a Deloitte case, consulting, and then Deloitte would come and use a case to recruit. But it wasn't the same case. There was no data flowing, and there wasn't a real world case that Deloitte was using to teach consulting and then to recruit from. And I just saw that as a perfect example of employers kind of leaning in, and college presidents continue to say, well, I'm not going to teach to what the employer needs because they change all the time what they need. But as enrollment declined and the price of universities go up, the universities need to start addressing the specific skills that the employers need in an authentic project-based way that can be recognized, credentialed, and maybe not lend itself to 4 years and $200,000 pathway.
Thank you, Mark. Diversity, equity, and inclusion. It's also on everyone's mind. It's been more prominent ever since the tragic death of George Floyd. I'd like to hear from each one of you, how are you integrating DE&I in your underwriting of investments, as well as what solutions do you see emerging in the United States over the next 5 to 10 years? Matt, we're going to start with you.
My firm has 5 full-time investment professionals, of whom 3 are black and 3 are women. That wasn't necessarily planned, but there is just so much undervalued and underrecognized talent out there. We've seen the same thing with our investing. Our pipeline right now, we are in process with 3 offers, the first 3 deals, I hope, of our 4th fund. 2 of the entrepreneurs are black men and 1 is a woman. That wasn't planned either. But there's so many, biased assholes out there that, there's a chance to generate alpha by not being biased.
Caroline? Thank you, Matt, for that.
Was that too timid?
No, we love that, Matt. Keep it up.
Yeah, I mean, from my perspective, I'm first generation Latina. I have a bias towards investing in underrepresented founders. I mean, growing up, coming from communities like the Latin community, we're entrepreneurs. Like, it's in our DNA, and I know that that's the case for so many, again, underrepresented in a venture capital sense. Absolutely, we need to get more dollars into the hands of Black, Latino, all people of color, and women. But for me, I also get excited because of the difference in worldview and the difference in understanding the opportunity set and taking the problems of that lived experience that's different from 90% of the people in this country and being able to make a real business model out of that. And so for me, I'm pretty explicit, and like that's how I underwrite it. It's there, whether or not it's technically a mandate from a client of having it be a DEI mandate. I don't care. Like, I'm going to be biased and disproportionately allocate to women and people of color.
I've benefited from affirmative action my entire life, affirmative action for mediocre white men.
Thank you, Matt and Caroline. Allison, go ahead.
It's an interesting question. We obviously have our own approach, as an investment firm, but we also have this direct line into how employers have been thinking about DEI. And it's been really, I think, disappointing to see how legal threats have completely reversed most DEI-related initiatives, especially when it comes to hiring or retaining employees. And employers, especially large employers, are scared, and they've pulled back. They've not committed to continuing to hire in underrepresented pools of talent in an explicit way. They have demoted or moved chief diversity officers that they insisted were absolutely empowered 5 years ago. And that's, we made a lot of investment in the space based on the feedback from our HR leaders who said, yes, I want special, tools for recruiting and hiring and supporting underrepresented talent within my organization. And that has been a tough pill to swallow, both in terms of our investment returns on those areas and just kind of seeing how things take place. I think the silver lining is that a lot of those initiatives at the employer level are now being integrated into broader tools. So we've seen DEI analytics tools, turn into more people analytics tools, and more people analytics tools explicitly include these type of data points. And the world is changing, where I think 5 years ago, for example, it was very normal to talk about investments in LGBTQ communities, for example, and today it feels almost irrelevant to ask, or odd to ask someone about their sexual orientation when you're making an investment. And so to me, that feels like we're moving forward. And at the firm level, I think we're also not as explicit about it, but we see a diversity of investment through our team, myself, and other members of our investment team that are not just white males, although we have plenty of those too. It flows through to the portfolio.
Thank you, Allison.
No shortage of
Mark?
So I would start kind of with a more philosophical lens, and something that grounds us kind of as a firm value is the measure of society is how they treat the most disenfranchised, right? And so when you look at the products and services of our portfolio companies, they tend to address those most at need in our population. So unfortunately, the workforce and education challenges are 4 times worse for low-income and people of color. And when we're investing in companies and we want the broadest possible impact and the broadest possible market, it's going to come from those companies. Those companies tend to attract management teams that are diverse. So 72% of our management teams are women or people of color, naturally, because those are the people that are addressing these problems in the academic or educational world. And then when you move to kind of some of the challenges, I guess that's just a natural affinity I would say we would have, and then across our firm as well. We have done some explicit DEI investing for some of the corporate technology and face some of these challenges as there's been that sliding back. And I think the answer is this skills-based hiring, which tends to be more democratic and less focused on educational achievement, that tends to be more weighted towards people with money or other privilege classes. And then the other thing I'll say, it's a little controversial, but I've heard a couple of talks about this, which I think is really interesting, is women are absolutely crushing boys academically right now. And so we have a problem, and we want to make sure that if it starts to be focused on and addressed, it's not at the expense of the progress that we've had in some of the women academic and income equalities. But men are being left behind in droves, and I think it's creating some real political challenges for us in this country. And I think it's worth kind of pulling out that point that creates a kind of an angry, disenfranchised class of deaths of despair that I think is interesting in this conversation, but usually not brought up in the same D&I conversation.
Thank you, Mark. Also critical, AI. You hear about it every week, every day. Also a question to each one of you. Human capital is especially critical given the rapid rise of AI. I'd love to hear from each of you. What are you seeing on the investment side with regards to AI? Matt, you first.
So I wish I had a nickel for every AI tutor company that I have seen. There are quite a few of them. And I think there will be good tutors that use various forms of AI at some point. But I don't think that Gen AI is ideally suited for doing it, because basically it's focused on delivering a bland, medium, Wikipedia-like answer. They tend not to be colorful, incisive, memorable, funny answers, at least not yet. And while Gen AI is delivering those responses to prompts, it's not really paying any attention to the person behind the prompt. So if you think about your experiences with YouTube and TikTok, those algorithms do understand us in a scary and potentially quite dangerous way. They are sort of probing constantly for human weakness and figuring out how to promote addictive behavior. You don't have that experience with Gen AI, and so if you watch kids, you know, or adults just playing around with it, they'll ask a couple of questions and then lose interest. Right? It doesn't have that addictive quality. And a good tutor makes a connection with another person that is very powerful that AI is not anywhere close to replicating right now.
Thank you, Matt. Very quickly, Caroline and Allison.
Sure, yeah. I mean, for us, really, it's the whole AI thing is comical as if it just came onto the scene. We've been dealing and working with AI and machine learning specifically for quite some time now. And at the end of the day, it's really understanding what exactly you're investing into. If I could have a nickel for every proprietary algorithm that, you know, dig into that black box, understand and think about the ethics, understand and ensure that no one's being left out, left behind, excluded. Usually it's unintentional, but again, if it's the same people are coding this, and we know what that looks like. So it's not taking anything for face value. And I think that's not specific to education, it's especially so in education, but that's been our view.
Allison?
We are not deep tech investors, so we're not investing in the more technical side of AI, more applications. So we focus on kind of AI native solutions, and I think where I get most excited are two different kind of pieces of it. One is the ability, I think we see so many AI solutions that want to be everything to everybody because they can and it works, and I've had a million of those meetings where, but I think like where historically market size has been something that's held back a lot of investors from things like education, things like, you know, very specific tools and solutions focused on specific populations. And I think in the world of crowded AI agents, the only way that you can be successful is by starting very, very specifically and very, very, you know, what is your wedge? I am helping loan officers process mortgage applications. I am helping coaches serve 1,000 mentees at once instead of 10, you know, being that specific. And that gives me a lot of hope for a lot of the areas that we all invest in where it's actually possible and attractive to start on something so niche and then expand from there. And the second piece is actually AI improving margins on products that historically have not been venture backable. If you look at education or certain areas of healthcare, as a venture investor, we have a company that does financial wellness as a benefit, helping hourly workers navigate financial stress. And their gross margins were negative 13% until they started implementing AI, and now they're 60%. And all of a sudden, that becomes a really attractive business. So again, that makes me really optimistic for where we can start to see money flowing into areas that historically have been hard to back.
So I'll be real quick. Sorry. Initially, we're solution investors and don't think that AI should wag the dog, but native AI is a different model. So we've seen our portfolio companies all adopt some version of it to better customer service, lower costs. Everyone thinks their valuation goes up 8x because they have a new AI addition. But a couple of cool things I have seen more native, which is a good way to look at, is so companies who come in and they have 4 or 5 different language models that they're optimizing depending on the different issue that's coming up. And then they're building their own language model and moving off of the ones they have to pay for. And I've seen 4 or 5 companies optimizing that pretty interestingly. And it does create, like there's been a promise of adaptive individualized learning for a long time. And AI is helping with that, meeting students where they are in a way where you don't have to have a big kind of tree taxonomy, but AI can do that, and in aligning skills. For a long time, different data for a different name of a profession was not able to be clean across different employers, and I've seen some really nice AI tools, and if you're starting native with some data cleansing, with 4 or 5 different language models, that seems to be working pretty well.
Great. Thank you, Mark. So we have a couple of questions from the audience. One of them is specific to Caroline, the rest is general, and anybody can take them. First, Caroline, do you at Sonin invest in social entrepreneurs based in Africa, specifically East Africa?
So 95% of what we do is investing into funds, so serving as an LP into GPs. So likely we would encourage you to, we make investments into funds that absolutely invest in those areas and in early stage investments. So we like to serve as a ecosystem builder, facilitator, create connections. So happy to do that.
Great. And any best practices for how to invite and keep employers engaged when building job programs? Who wants to take that one?
I can take that one.
Go ahead, Alice.
I'm sure this is not news to everybody, but there is this secret weapon when it comes to working with employers, and it's called an advisory board. And they love advisory boards. That is what we've built at Sempervirens, and a big part of our value proposition to our portfolio companies is actually helping them build advisory boards as well. So bringing employers or key stakeholders at employers that you're targeting on board as advisors, building a relationship with them outside of whatever the transaction might ultimately be, listening to what are their biggest issues, what are their biggest challenges, and then taking their advice and making them feel like they're part of your process and your mission is a great way to get them on board, because then you can understand. We talk about selling to an employer, working with an employer as like something very general, but it all has to do with people, internal politics, and understanding key stakeholders and structures of power. And so if you can have somebody be your Sherpa in that process, that relationship is worth its weight in gold.
Can I ask Allison a follow-up question? Because I've seen so many of these workforce ecosystem employer convenings. And so what's the secret of, they all come, they all want to be there. What's the secret of getting them to follow up and actually do something where they're actually doing some training or hiring somebody?
Doing training or hiring somebody specifically?
Yeah, because they commit to it, but then they don't do it. And I've seen that time and time again.
Yeah.
Now this is your constituency that I get to complain about.
At the end of it, we've spent a lot of time with employers specifically around early talent, apprenticeships, removing credentialing requirements. And the biggest challenge for them, particularly with the entry-level workforce, is that they don't stick around long enough for them to actually recoup their investment in that person. And so whether it's reframing those economics or changing those economics, I think that has to be part of the equation to get somebody to follow through on any of these programs.
I would say it's sort of the other way around. My company, Guild, which helps employers to offer education as a benefit to employees, has demonstrated to the satisfaction of a number of very large employers, including Walmart and Disney, that if you offer education as a benefit, they do stick around much longer. Their first customer was Chipotle, which has 150% annual employee turnover. Think about that. It's a huge cost to them. And when you offer someone a credential that they think might give them a better future, they do actually stick around longer. So Chipotle calculated a 2.8x return on every dollar within a year. Wish I could find more guaranteed 180% annualized returns. My life would be so much better. And the funny thing about Guild's experience is that employers seem oddly uninterested in creating internal promotion pathways and doing upskilling. So almost all of, at least where frontline workers are concerned, so almost all of their customers, a dozen or more customers early on, were completely uninterested in creating pathways. They just wanted to retain these frontline workers a little bit longer. And then JP Morgan came along and they created a pathway with a number of different credentials along the way, from bank teller to financial analyst. And I just don't understand why more companies aren't doing that. It's a weird disconnect. I believe the ROI on it is very high.
Thank you, Matt and Allison. Next question. Vocational schools and workforce development programs are highly susceptible to market hiring trends. How can providers consistently and structurally account for that volatility?
Yeah, we've got a couple of boot camp companies, and in the past 3 or 4 years, the tech companies that hire from these boot camps have laid off, 40% of their workforce in some cases, and so our recent graduates of our boot camps are now competing with, people with 10, 20 years experience that have been, and so we're moving to training of things that are in demand. You have to pivot the curriculum very quickly to things like AI and cyber, away from full stack software engineering as the market evolves. And we're admittedly a little behind on that. We're now pivoting after the decline. Maybe you can get ahead of that and see that these industries are going to be hiring less, maybe predicting hiring rates and then building curriculum in advance would have been something we should have done better.
I've backed a number of boot camps, and they've all started off, almost all of them started off with a direct-to-consumer model and abandoned it and moved in the enterprise direction. It's a little bit safer. It's recurring revenue. But taking someone possibly without any post-secondary credential whatsoever, or possibly a liberal arts degree, and turning that person into a programmer is a really heavy lift. And so I and Mark and Rilwan are all investors in a company called PathStream that I think is exciting because they've scoped out a more manageable challenge. They take frontline workers and typically people with just a high school degree, and they train them in a skill like project management or financial analysis, and they also train them in a platform. So project management plus Asana, or financial management plus Tableau. And it turns out that having experience using the platform is extremely attractive to employers in a way that the abstract skill itself is not.
Thank you, Matt. There has been considerable discussion about AI in education. How pervasive is the use of augmented reality, and are you considering investments utilizing that technology? Who wants to take that?
We have not invested in AR or VR. I host a panel at a conference called Transform every year, and I do something with the people on stage called Fad or Future. And I name something, whether it's AI, VR, DEI. That was a very controversial answer. Nobody wanted to say that one. But in any case, whenever I bring up AR, VR, everybody believes it is a fad. And so we have not seen consumer. We tend to look for, we believe that consumer adoption, employers don't do anything until somebody makes them do it, or it makes sense from a dollar's perspective. And so we look, or I spend a lot of time looking at consumer trends and understanding how does that trickle up into the enterprise. And I think until we see widespread consumer adoption of VR, AR tools, it's going to be very hard for employers to utilize them unless there is a very specific use case. I think there's some interesting, use cases around medical training or, mechanical training where there's a real need, and I think that can work. Again, kind of going back to this niche, this idea of being very niche with a lot of these new technologies. But other than that, we have not done anything.
Thank you, Allison. Anyone else want to add to that? Or?
Yeah, so we talked a couple of years ago to a bootstrap company that used augmented reality to teach welding skills. And it was super cool. You would put on a welding hood and pick up a welding torch attached by a tube to a tank, and a virtual flame would come out of it and melt virtual metal. And there are apparently some parts that cost hundreds of thousands of dollars where if you do a bad job on the welding, you've ruined the part. And so you really, for skills like that, or using a crane, which is very expensive, a lot of military and aerospace applications, as well as things involving mechanical objects, there are some powerful use cases. But I think that in some ways the VR, AR headset is kind of a distraction. You just need 3D and a phone.
We have a company that does well called Immersion It's mostly around customer service training, and it's a big role-playing opportunity.
Yeah, you used to use comedians, underemployed comedians behind the scenes, and now it's AI, right?
Well, so why didn't you invest in the welding company?
There were problems with their distribution through channels. It was a small, I mean, it was super interesting. It stuck with me.
Okay.
But that's the kind of niche case. I mean, I will say one other thing about these highly specific targeted uses of AI that you mentioned, which is just, it's possible that one will make a lot of money on it, particularly if there's some sort of workflow or security requirement or something that is defensible outside of the AI part of it. But there is a tendency for the large language models to cannibalize the companies that build on top of them. And there was one company called Jasper, and there are 2 great articles in theinformation.com about this. And they ramped very rapidly with a marketing automation solution that generated marketing copy to 60 million in revenue and $1.5 billion valuation in just a couple of years from when they introduced the product. And then ChatGPT came out, and a lot of their customers, maybe as many as half, said, you know what, this is good enough.
Thank you, Mark, and Matt, and Allison. There is a decrease in capital allocation toward the impact theme of educational technology. Does this concern you? Does this change your risk appetite? Who wants to take that?
I think it's concerning insofar as we need capital flowing toward founders and innovators solving these problems. I guess the challenge that I have as an investor, and to be clear, I started my first fund largely around an ed tech only thesis, and over time have expanded my investment mandate kind of to broader future of work, including healthcare, kind of really around this employer-employee relationship, because ed tech had a certain connotation which made it difficult for me to raise capital from LPs, frankly, and also for our portfolio companies, when they were categorized as ed tech, they were getting lower multiples on revenue and ultimately lower multiples at exit. So a lot of my ed tech portfolio sold for subscale outcomes, less than $100 million. Great outcome for the founder, not quite so great for us as investors, where you're getting 2x on your money. And so I think there's a certain kind of rebranding that has to occur of how do we think about ed tech, how do we think about workforce so that it is tied in investors' minds and acquirers' minds and founders' minds to solving a really big problem where there do need to be very large winners, as opposed to it being a narrow slice that somebody decides early on, either I invest in ed tech or I don't invest in ed tech. What's been so amazing for me with AI is looking at some of the larger multi-stage funds that have published their theses on AI, and you read through them, and it's ed tech and future of work. It's like, you know, next generation vertical marketplaces and you know, how employers are engaging with talent using agents versus people, and they just don't call it that, and they're out raising $8 billion, and we're out raising, you know, a few $100 million. So I think a lot of it is how you package the messaging and market to other investors and acquirers.
Thank you, Allison. Next question. Trends come and go. Across your years of experience, what have you seen as timeless challenges and opportunities in the adult upskilling and reskilling space? Who wants to take that one?
I can issue an RFP. I want a company that teaches illiterate adults to read. I have a company that does that for first graders, and it's doing super well. It went from $2.5 million to $39 million in revenue in 2 years. I think there is, you know, the median American worker, by some estimates, reads at the 6th grade level. We have failed them, and it makes it impossible for any other kind of economic empowerment to succeed with them.
And for me, I would say the biggest challenge that I've thought held back our workforce and economic mobility in this country is a system whereby people can get work-based learning experience, get paid to get job skills, particularly for the 80% that don't graduate college and get a BA. 80% of people do not graduate college and get a job that requires a BA. 80%, and there is not an employer-based pathway for those people where they can make a living wage and learn the skills they need to go after a middle class.
Anyone else? Okay. Last question. Any best practices for how to invite and keep employers engaged when building job programs?
I think we already answered that one.
Okay, we're out of those questions. Okay, last questions for all of you. What are you most excited about for the rest of this year and into 2025? Mark, we're going to start with you.
I was hoping I'd go last. It's a tough time right now. I feel a little bit like I've been through a 1999 cycle and a 2009 cycle, and I feel like a little bit we're in that cycle again, and the market doesn't necessarily show that we're in a tough period. Besides the fact that there's been a liquidity crisis, no bank lending, no equity investing, no IPO market. So that's a tough spot to be in. What am I excited about? I think that I'm going to go with the theme of the conference. So I taught MBAs for 20 years, and by the time I was done teaching MBAs, not a single one of my students was interested in going into a job without deep meaning. And so I think what I'm most excited about is a potential elevation of consciousness around impact, around meaning, around people, especially the youth, not having an interest in going into something where they're just a cog. And maybe we're at a point where we can have some elevation of consciousness. You know, if we're not about to have a black female president, we're damn close. And I think it's time for this country to kind of step up and do the right thing. And I think the youth, and particularly my kids and the kids that they know, they're all leaning in that direction. They care. They care about climate. They care about the disenfranchised people. And I'm feeling like there's a lot more love, even though we have a divided political spectrum. I feel like people are talking about intentionality and love and presence and empathy more than ever.
Thank you, Mark. Matt?
I feel impatient. There are things that I wanted to see changed 20 years ago that haven't moved. And I guess what I am excited about is that I feel like there are more truly catalytic system-changing solutions being developed than I saw when I made my first ed tech investment.
Carolyn?
Sorry, example? Yeah, so I mean, I think Guild and other companies that tap into employers to deliver education for some of our more vulnerable fellow Americans is exciting. One of the things that I am particularly excited about, which I am going to attempt to write about, and I'm also working on field building with a fellowship at Stanford, is the idea of insurance companies paying for education. And I don't have time to talk about that right now, and it sounds crazy, but it's actually happening quite broadly. It's just that I haven't seen anyone bring it all together.
Great. Carolyn?
Yeah, I'm excited about putting money to work. I mean, we're action-oriented, and we write checks, and we need to get these solutions. Education especially is something that's personal for me. You know, my brother isn't going to college, like, went to a horrible school and was completely failed by our system. Like, we have to find a way to figure this out. And I think we're getting closer because we're having these conversations.
Allison?
I can't keep it to one thing, but I'll be short, I promise. So I have two things I'm really excited about. One is this shift back toward the consumer, being empowered to demand change, whether it's healthcare, whether it's how you get your job, whether it's how you get paid. I'm seeing within our portfolio a willingness for consumers to pay for better healthcare, to go out and find good training solutions that work for them. And there was a period of time where that willingness to take control was not there, and the employer was leading the way. And I think now things have actually flipped, where the large B2B stakeholders are slow, but individuals are forcing change, and that makes me really excited. The second is that I think we are seeing more diversity at the board level, in the investment level, than we have seen in many years. I am on 3 boards that are all female, and it was not a thing. Nobody mentioned it. I just thought about it. I was on an enterprise AI panel the other day. It was 4 female investors, and I'm just so excited to see that kind of progress that is starting to feel really natural.